Okay, so this system is for the MVP 10-minute simple system. To set it up for the momentum volatility predictor system here, you'll go to File, New, Chart. We're going to pull up, in this case, we're going to pull up US yen. We're going to hit New. We're going to open 10-minute bars. Okay? We're going to click OK. Once that's opened up, we're going to add on a couple indicators. So right-click on your chart, go to Indicators. Now choose the MVP, click New, and go in and choose the toolbar shortcut. You can double-click or click New. And then also go to Expected Range, add that on. Let's click Apply. And that now has our chart set up. That's all we need to do. Our chart is now set up. Now we may want to turn on some things to make things easier. We can go over here, and it's really not recommended that you mess with sections 1, 2, 3, or 4. Okay? You might want to mess with the breakout ticks if you want to, but we default that and leave that at 2. Okay? That's our normal setting. So we get multiple signals. It's up to you if you want sequentials or not. You could set that to false if you don't want sequentials. We're going to want to enable alerts. This will be the visual alerts that you get by going to File, New, Alerts on Ninja. And that'll bring up your alerts window. And then we want to enable our voice alerts. And by enable the voice alerts, we can actually hear it when it fires off. Now we can also turn on the signal arrows. We want those on. We want the arrow labels. That is completely optional. You're only going to want that if you're trading Nadex. Okay? And that is basically saying that you're probably going to want an in-the-money strike around that area. You may end up getting it a little bit tighter, but around that area. Often I am, honestly, tighter usually than what that will show. But you can turn that on if you're trading Nadex. If you're not trading Nadex, you don't need 0702 on. It'll just, it'll probably confuse you, but I mean, it'll tell you buy or sell. It's just a lot of extra text on the screen just to show you what I mean. Okay? So it's a whole lot of extra text. You may or may not want all that text. I mean, green, and it's not that hard to figure out what's buy or sell, right? So you can decide whether or not you want that on. Trigger price line. So this is the line of basically what price it's going to have to trigger past, break past. So if it says 102.30, it's going to have to hit 102.31. So if you're going to use a limit order, add a tick to whatever price it says, or subtract a tick from whatever price it says. So if you're buying whatever price that the trigger says, add a tick to it. If you're selling, subtract a tick from it. And then click Apply on that. Okay, and then as far as the other settings, there's really nothing else to do unless you want to change colors or whatever. Okay? If we go down here, we can look at it now, and it'll show all the stuff on here. Now again, you can go in and click Alt up to make your bars a little narrower. Makes it easier to read everything. And so right here it had a trigger price of 102.43. So when it hit 102.44, that's where you would have bought. Okay? So one tick above the trigger price. And that's when your breakout buy alert will fire off, is when it hits 102.44. Okay? When it breaks that trigger. On the sell side, one tick below the low there, the low is 102.33, so it's going to sell 32. But remember, we have 2 ticks as our actual entry. So when it hits 102.31, one tick below would be where our limit order is, or our stop trigger limit order is, okay? On Nadex, that's where you're going to put your sell in. That's when you want to get in the trade. If it doesn't trigger, we don't get in. Like this is at a 102.45. If it broke 102.45, which means it had to hit 102.46. It never broke the price of 102.45. It got to it. Like right here, this high went to 102.45, but it never went above it. Therefore, we don't have an actual trade. Okay? Let's see here. So again, to reiterate, if you're not trading Nadex, ignore this like 102.32. What that's basically showing you is a potential strike to be able to buy. Personally, I buy closer than that. Okay? The strikes I like to buy on these, if I'm doing Nadex, is I'm going to buy like right below the low of the, usually the lowest bar since the setup bar. So I'm going to get pretty close. So to break down the entry rules for you, MVP entry, the bar must close in the direction of the MVP alert. This is a key, okay, for it actually to set up. So when I get an MVP setup bar, this is the 10-minute system, okay? I want the bar to close directionally in the direction of my trade, the MVP setup bar itself. So right here, we had a bar closed down, but an MVP setup buy. If I want the bar on the MVP setup buy to be an up close and a sell on the MVP setup down to be a down close, does that invalidate that signal for me? Yes. So I would void out, like, to me, I'm not even paying attention to that trade. Okay? Not doing the trade. I want it to close in the direction of the signal. Okay? And you can see why. I mean, the thing, if it would have got triggered, it would have definitely lost. Okay? So I want it to close in the direction of the signal. So that's a very simple rule. Any questions on that rule? If it's a buy, I want the MVP setup by bar to be an up close. If it's a sell, I want the MVP setup sell bar to be a down close. So that's rule 1. Rule 2. If it's a buy, it has to be broken by 2 ticks. If it's a sell, the high has to be broken by 2 ticks. If it's a buy, sorry. If it's a buy, the high has to be broken by 2 ticks. So whatever that trigger price is, that's going to be 1 tick above. So I'm going to want it to break that trigger price. So if it says 102.43, I want it to break it. I want it to actually hit 102.44. Okay? It'll actually tell me when it does, but I want to have my order already sitting in there. So rule 2, if it's a buy and the MVP setup buy had an up close bar, rule 1, when it breaks 2 ticks above the high, that's my entry. Okay? If it's a sell and it closed down, when it breaks 2 ticks below the low, that's my sell entry. That's rule 2. If I'm using underlying market, it's pretty simple. I just sell or I just buy, like Forex or futures. Okay? If I'm using Nadex, I'm using the closest in the money contract. It'll probably actually be closer than this predictor line right here. Like it's saying 102.32. It'll probably be more like 102.40 or whatever. I'm going to want the closest in the money, and I want it to be, personally, I want that closest in the money to be like ideally below the low of the buy bar, or above the low of the buy bar, or if on a sell side, ideally above the high of the sell bar. So I may not get one, but I like to have that room, to have a little bit of wiggle room, because if you get like right at the money, the thing could just nail you. So again, if I buy, I'd like my strike to be like below the low of this bar, as close as possible below the low of it. If I sell, I'd like it to be above the low of this bar. So the closest in the money strike, which means it's going to have a risk greater than $50. Okay? So if I went on and I was going to trade on US yen, I would choose in the money strikes within an hour to expiration, 0 minutes to an hour. Okay? And then let's say whatever direction I'm looking to go. So let's say I was looking for a buy. I could choose buy. And it'd show me what current in the money strike was available. Okay? So that's actually the only in the money strike that's available with less than an hour to go. And this makes, you can get rid of all your filters. You can verify that's accurate. But basically there's a 35 and there's an 82.50 current hour. Okay? So right there, but anyways, in the money, you could try next hour, but a lot of times it reverses, so I prefer current hour. And it's pretty much that simple. And then I can choose my direction. So maybe I choose a sell. There's a sell for $30.50 or $2. Obviously, I'm going to choose the $30.50. Or if I was buying, I could choose the buy side, or I can just choose both, whatever, to make it easier. But if I'm buying, I'm going to choose the buy side. If I'm selling, I'm going to choose the sell side. Okay? So again, all I had was 0 minutes to an hour in the money. That's all you really need, and then you can find the strike that's the closest one that is available. Ideally, you're maxing out right around $80. I mean, you may end up doing an 81 or 82 or 83. Ideally, it's less than $80 in risk. Okay, now if you're selling, that'd mean like you're selling for $20 or higher. If you're buying for $80 or less. Okay, so again, the risk is right here in this column. It's like minus 72, minus 82. You're looking for like really a maximum of $80 max risk, not planned risk, max risk. Okay. So you know which binary to choose. If you're just buying, it's pretty simple. Just buy or sell. Okay. And my stop loss is if it hits my strike. Or if I'm trading underlying markets, if it hits the lowest low since the trigger buy or the highest high since the trigger sell, whatever. Like right here, this is a sell, so that'd be my stop. And then I control it with the SAR. This is my buy. Then stop, trigger it with the, the buy. Right there, this is a sell. There's my stop loss. There's my SAR. If I'm in underlying markets, if I want to trail it, I can trail it all the way down. Or I may have just got in and scalped 3 or 4 ticks and been out of the trade. So it depends upon if you want to go for it. The challenge is, a lot of times these markets do reverse at the end of hours, so you just want to be aware of that. I mean, there's one that took off for you. You could have, made some nice profits on it. But your stop is at the low of the bar or at the strike price. So, to me, whichever is lower. Okay? So, again, you're looking for a max risk if you're using a binary contract of $80. So that'd be a buy for 80, a sell for 20. Give or take a couple dollars. Okay? Don't, not take the trade because it's 80, 50, or whatever. Okay? So you have to look at what makes sense. Okay, I'm going to give you the system ABCs, but you still got to fill in the 1, 2, 3s and just see what's there and what makes sense. Okay. And by that, what I mean is you got to just look at the market and see what's out there. Like right now, there's a 22 by 79. So if we had a signal right now, both of those would obviously qualify. Okay. Now, I am not saying, just to make sure you understand, I'm not saying you need to choose the 102.32. 102.32 is way down here. Look at the low of this. The low is 102.40. So you could choose like a 102.40, a 102.35, whatever was available, contract. Okay? So, that's ideally. Now, it depends on where it hits, too. This thing finally hit right over here. But I'm just saying it needs to be below, at or below the low of... really below the low of the setup bar on a buy. The stop loss needs to be basically pretty much right, like a tick below the low of the setup bar. That strike that you choose. Now, if you sell, it needs to be a tick above the high of the setup bar. Now, the next thing we have is we're going to look at your take profit price. Your take profit should be, approximately $95, $96. You need to look at, and I want to be careful that you understand this. You need to look at the binary pricing on the ladder. Like right here, you could use like 4 or 97, 96. What happens though? This is a very important thing. What happens when you don't have a bid and offer? What happens on a binary contract when you don't have a bid and an offer? The size goes away. Look how there's only 5 contracts. Okay? Now watch what happens right here when there is a bid and offer. Look how there's 100 contracts. Okay? Or 95 on this one. So you want to get out before that bid offer goes away. All right? This is a very important lesson. I have it in a lot of other videos. So to make sure you get it here, you want to get out before the bid offer goes away, because otherwise, what if 10 other people are doing it? Then now you can't get out, right? Or what if one guy is coming in and knocking out, 20 contracts or whatever? So you want to get out before that bid-offer spread goes away. So look at what the bid-offer spread is. It's about $5, okay? $5 to $6. So knowing that it's $5 to $6, then I know that bid-offer spread is going to disappear at, like, say, 94, because 94 by 100, there's nobody's going to be, like, in there, like, letting you. Nobody wants to buy for $100, right? So basically, I'd want to get out, like, say, $7, $8 before that. So I may, if it's $5 wide, then I probably want to get out like $7 before, so like 93. So 93 or this side 7. So you want to look at how wide is the bid offer, add a couple bucks to that, and that's where you want to get out on the maximum price. Like here's a $1.50 by 6, so I could get out at $6. That'd be good because there's a bid offer there. And notice how that even though it's only a $1.50, there's 100 contracts. Okay. So that only is a $4.50 bid-ask spread. So that showed me I could get out, around $5.50 or $6. Go much lower, we're not going to be able to get out of the trade with only 5 contracts, and we're going to have 5 of them. But see, I dropped down to $4.50, and notice what happened, how it just dropped down to 5 contracts. So that basically just let me know that like at 6 or 94 is basically where I need to be hopping out of this trade. And that's going to be different by each market. So whatever market you're looking at, you always want to pay attention to how wide is the bid-offer spread, add a couple bucks to that, like say 6, right here, or 94. Do you notice how that volume pops right back in and goes out, okay, when there's a bid-offer spread? So one of the questions comes up, how much general profit per binary? It's just going to matter what price you get filled at. I mean, if you end up getting in at 80 and out at, 94, you're going to make $14. If you get in at 70 and get out at 94, you're going to make 24. If I try to tell you got to make this amount of dollars, you're going to rule out trades like crazy, okay? You may make $30. You may make $40. It just depends upon what the value is of the contract when you get in. I mean, this one right here, if you had to sell right now, you'd be selling at 32, okay? So if you bought back at 6, you'd be making, 20, whatever. So, but I mean, if you sold at 32... you bought back at 6, you make $26 on the trade. So, I mean, I know like everybody wants like, what exactly am I going to make? And what exactly is the price I enter? What exactly is the price I exit? And how much exactly profit am I going to make on it? You got to look at the market. You got to just look and see what's there. So, I'm going to give you some general ABC concepts. Hey, we're looking for about a max of $80. That doesn't mean we're looking for 80. We're looking for a max. We may be able to get it for a lot better. Okay? Maybe you get $46.50. I don't know. Okay? I mean, right now it's like sitting on the middle of a strike. Okay? So it's like 46 by 53. So there's really not anything. You may have to wait a minute to actually get the right contract at a decent price. But you got to pay attention. You're trading options. Okay? It's not just buy, sell. So you got to look at it. You got to pay attention. You got to see what the best choice is going to be at that moment. Okay? So these are guidelines. The strike is not a guideline. The strike is very cut and clear. The price, you're just going to have to see what the pricing is. Because, I mean, if you're at the top of the hour, if you're 10 minutes away, you may have to adjust accordingly. Okay? And I know everybody wants an ABC, but there's the reality of the 1, 2, 3s, right? Okay, so again, stop loss if it hits strike. So if I go up here and I sold this contract, just as an example, this is just a demo, just throwing this out real quick just so you can see it, okay? And I place that order. It gets filled, okay? And then I use a stop trigger. Like I say, if it hits, my strike of 102.48, which is really close right now, then, get me out, but not any worse than a buyback of, I don't know, let's say $70, okay? Activate the stop trigger. Yes, it's too close. Put it at 49. Okay, and then it'll monitor, okay? So we'll be waiting on it to do its thing. Either it hits or it doesn't hit, but that's a stop loss in there. At the same time, I could simultaneously go over and set my take profit to buy back at. Now, you could buy back at 6, or you could say, you know what, I'm going for an average of $25. I got a good price on this one. If I sold the thing at 40, maybe I'll be happy if I can get out of it at, 15. So you could put a 5, or 6 or whatever, make it move way down, or maybe you could just say, hey, $15, I'll be happy, I'll be out. So I can place that order to buy back if it gets down there. Now I have a pending buyback. I have a stop working for me. Obviously, if one gets filled, I need to cancel the other. Okay? Okay, we can reactivate it. It's pretty simple. So there are instruments that have, their own little thing going on. Now, one person mentions the AGs. So let's look at the AGs real quick. Okay? And again, this is just a demo, so I'll just clear it out real quick. Get it off the chart, close it, and just close it. Alright, so that'll work on its thing. If we go down here and choose... I thought I canceled that one. There we go. Alright. Okay, so if we go over here and choose, like, say, AGs, probably not something you're going to be doing this a lot on. Why? Because they don't have intradays. Okay? We're looking for intraday contracts. So, Jack, this really shouldn't be affecting you on soybeans or AGs. Because you don't have intraday contracts. You only have the ones that expire at 2:15. Okay? So a question comes up. Are we using this on FX only? No, I'm giving you an FX example. But that doesn't mean that you can't open it up over here. And we can just as easily switch this over to, I don't know, Russell, whatever. I traded a lot on the AGs. But my biggest recommendation for you is going to be that you go back and do a back test. Okay? Go back and just run back 20 days. It should not take you much time at all. Okay? But run back and see what it works on. Mark up your charts. And, I mean, it's not a very intensive thing to test at all. I mean, that was a down close with an up MVP set up buy. That's a voided trade. It's not even a trade there. Okay? Let's see here. That's a doji, so that's fine. I don't really care about that on this one. That's a setup sell. It was a down close, so you know what? Not even worrying about it. Right over here, I'm going in. That's a setup buy, but we never triggered, so no trade. I mean, you just go through and you start just running through the list. Okay. So there's a setup sell that triggered. That was profitable. There's a setup sell that triggered. That was profitable. Setup sell was an up close. No trade. Set up buy, up close, never triggered, so no trade on that one. Let's block it out there. You just go through and just start marking. Just look at the temperament of the instrument, okay? And this is good for you because you're not going to have confidence to play. Don't wait for like 4 weeks to get 4 weeks of experience. Just spend 30 minutes and go back and do a month. You'll have more confidence in the trade. You'll say, hey, you know what? It doesn't seem to work on this, so I'm not going to trade it on this, or it does work great on this, so I actually have confidence to get going live now on this thing. Okay, so it'll really expedite your confidence. You'll know the system a lot better. Okay, if you'll just go through and mark up like I said, about a month of charts, and it should not take you long. I mean, it's up close. Did it break it? I mean, it tells you if it broke it. Okay, so up close, yes or no on like an up close buy. Okay, cool. We got to trade if it broke. Down close sell, we got a down close, did it break it? Okay, we got to sell. So, I only do in the money for these. So, I don't do out of the money on these. They just don't win often enough. And I know a lot of people have this hesitation, they're like, oh, but look at the big risk on out of the money, or in the money. Okay, that's a totally wrong way to look at it, because you can get out of the trade early. Okay? Now, if it comes down to the last couple minutes, and it's close, then just get out. Take a $10 hit or whatever and move on. Okay? If it's just oscillating right there, just hop out of the stupid trade. Don't wait. But, out of the money, people are like, well, that only has like $30 risk or whatever. Well, yeah, but it also has to move, and you're more likely to lose. So, out of the money is much more advanced than in the money on trading binaries. So, people trade out of the money all the time because they see that low risk, but they end up just losing over and over and over again. They trade in the money. If you manage your stop, then you'll be just, it'll it'll take care of itself. You'll have that defined risk. Okay? So I like out-of-the-money contracts, but again, they're more advanced. And if you hop on that to begin with, you're just going to be pissed off a lot. Because you're going to lose a lot. Because it takes a lot of more experience to get those out-of-the-money contracts down. One thing I would say is watch some different instruments, because some of the instruments that we've seen before, and I mean, that's one of the things, I want you to test it so you can know yourself. They could be, that first 10 minutes during the first couple hours of a trading session, like in the morning trading session, can be pretty crazy. And so just, look and see, like, if you're having winning or losing trades, one, only test out hours that there are contracts available. Like, don't be testing out the Russell at 3 a.m. It's not going to do you any good. Okay? So only test out hours that contracts are available. And when you do, look, did the signal come at the beginning of the hour or like middle or end of the hour? Okay? So those would be 3 things to look at. 1, make sure it's only in hours that it's available. And 2, the signal comes at the beginning, middle, or end of the hour. And, I mean, this is literally a 30-minute to 1-hour project for you. And if you'll do it, you'll have another system under your belt. Okay? A very, very simple system. Now, if you've traded in the money binaries much at all before, you know that when a signal comes at the top of an hour, the biggest challenge with it is the time decay is very slow. So if you don't get the movement in your favor, the binary doesn't move necessarily extremely fast. And so if I get a signal at the top of the hour, this would be, like Angadeep is asking about this, this would be where I'd be more likely to choose an out of the money. It's rare because you don't get them at the top of the hour a lot. But if I did, knowing that the in the money is going to move slow, it's like right here, this might be where I would choose an out of the money binary contract. And I would take profit like, $20, get out. Okay? So, but we're at the top of the hour. We haven't really used any of the range yet. We get a buy to go long. You bought, say, 1.5 or 3 points up, whatever. So either here, you're able to hop out of the contract. So top of the hour, got all the range left, get a signal. That would be pretty much the only case where I'd be using an out of the money binary contract. Okay? We got a up close, signal, buy. Down close never triggers down close. Doesn't fire. There it is. Fires off right there on the sell for the 9 o'clock. There isn't a 9 o'clock, but it would have won. Okay, notice here's a good example of top of hour. Okay, so again, make sure it breaks 2 ticks below the low. So that one actually would not have fired off your order. So even though it says MVP setup sell, it would not have fired off your order. Okay. And I would recommend you don't have the text on there because I think it'll add more confusion than anything. So, personally, I recommend you leave the text off and you just do the simple thing of clicking the middle mouse button using your data series box, because I think the text is going to probably cause you more confusion than anything. Like, you can just get rid of that stuff, get rid of the labels, click OK, and now your chart's just really clean. You can even drop this expected range down. Like that. Okay? And then you're like, okay, boom, up close, green. What's 2 ticks above that? Alright, great. I'm going to buy. Now this I can do it in the money or an out of the money because it's top of the hour. I got all the range left. Awesome. I go over here. Okay, set up. Okay, top of the hour. Again, look at that, top of the hour. That's where one that I might choose out of the money. I mean, after I say don't do that out of the money. But I mean, it's a really simple system. It's up close, set up, great. Down close, set up, great. Okay, does it break it by 2 ticks? Excellent. Choose it in the money. Unless it's top of the hour, you might choose it out of the money. Like, that's all there is to it. So you don't have to make it more difficult. I literally keep the system this simple. I don't wait any amount of bars. I just wait till it breaks. So, in other words, I may have, at the end of the hour, I'm going to have to roll to a new contract, right? So, like, if this hour expires and I'm still waiting, if we go back here, and let's say it rolled over to, so I got to find one. Usually it doesn't take that long. Usually if it takes a while, it's not happening. Like right there, have current hour, and that triggered, fired off, boom, you won on the trade, like instantly. I'm trying to find one during the day. I'm usually using this on FX, but let's see here. Like that's a trade top of hour that would have lost. Out of the money, would have been in, out of the trade, done. Like here's one that, okay, so you put it on, you're waiting for it to happen, it doesn't happen that hour. Alright, so you cancel out the stop trigger. Then you set one for the next hour, doesn't happen. Cancel out the stop trigger. Okay? Then happens the next hour, finally happens. Okay, now that trigger's off. So I really don't care how long it takes. I'm just waiting for that to be broken. Now you can add in volume to this, you can add in deviation levels to this to help improve it if you want to. Personally, simple on this one is just how I trade it. So if you want to go in and start adding a bunch of things to it, you can. But the goal of this system is to get you started. I mean, and just to get one more play on your playbook. I mean, there's the deviation level. Is it going to keep going? I mean, obviously those things are going to just make things better for you. But, it's really easy to overanalyze. And I'm trying to give you a system that you don't have to make so complex. Well, I didn't take this one because of that, and because of that, and because of that. It's like, well, what would happen if you just followed the system? So, it's up to you if you want to make it complex. I'm teaching you how to make it simple. Okay? If you want to add in deviations, you want to add in volume, then that could be great. This is a very good beginner system. This and Spike Striker are the two best beginner systems to start off on. And you can add on to your playbook. And they're still good. I trade it. I'm not a beginner. Okay? So, I mean, it's a good system for you, whether you're a beginner or not. It's great for beginners because it's so easy. Okay? Up close, check. Breaks high by 2 ticks, check. Buy. Top of hour, I can do an out of the money, I could do an in the money. Alright, whatever, I can do both. If I'm trading Russell itself, buy, stop loss, this right here below the low. I'm actually trading like the Russell future. Trail it. Trail. Okay, finally gets hit right there. So, I mean, you definitely gave up some money on that by trailing it, but you're able to follow it a little bit further. You made a nice profit on the trade. You grabbed, 36 to 42. I mean, that's like $400, $500, $600 on the trade. So, but, my whole goal is just to make this as simple as I can. The setup arrow happens whenever there is a setup of all the requirements for MVP to give a setup buy. But it has to be broken out for the actual arrow to fire off. It's just as far as where it's at, it's just how the Ninja Trader works. It doesn't matter that it's higher or lower. Like, it doesn't matter that the green's higher here and the green's lower there. That means nothing. It means it broke 2 ticks. That's all it means. There's nothing beyond that. So it does not have to break the next bar. If you just look at the charts, you can see this one right here. It didn't break until like 5 bars later. We can see ones that broke like 3 hours later. So it could happen at any time. So yes, green is the actual buy, cyan is the other one. If you turn on the labels, if you're getting confused, you can turn them on. Just don't worry about the text because that'll probably make you more confused. Again, it's built for another system. So I'm showing you a very simple system based off of it. On the other MVP system that's more complex. But if you just show the labels, you'll see it'll say MVP setup, okay, and MVP breakout. So you got the setup, you got the breakout. Okay? So again, this is oil this morning. We got a setup right here. We got a down close. Awesome. Okay, it breaks it by 2 ticks. We got a short. Again, if you're a futures trader, trail it on down. If you're a binary trader, in the money, expired, done. Over here, we got a setup. We're still breaking that 2 tick break below. Okay? So once it breaks 2 ticks below, we'll have a sell. On the setup buy, 2 ticks above, breaks it above, that's a buy. You can just keep going. You can see, it's a pretty sweet system. I'm not saying it's perfect. Obviously, no system is. The big key is make sure, and you may not always get the strike, okay? You might not always get the trade. Like, this was a big 10-minute bar. Your strike would have been way up here. So when this thing fired off, there's a good chance you never got filled on this contract. Now, if you have that order working, to sell it, a max, sell of $20. The market ran up here. You may have got filled on that contract for $20 and it came back down and you'd have been profitable. This would have let it been working for the hour once it broke. Because basically you'd say here, sell, at $2.5 off the market, but for a max sell of 20 or a max buy of 80, right? So when it flew up, you may have actually got filled on it and then it expired in the money and you're profitable if you let it work. So here's another, this one actually went down, way down. Finally it popped up. Well, now you can choose this in the money based on where the momentum setup buy was. And that trade obviously was profitable. And it was top of the hour, so you could have done out of the money on that. That's oil, So you can try this on a lot of different markets. And it's just a really simple system. And the cool thing is, since you have the audio alerts, you can have a lot of charts open. It's only going to happen once every 10 minutes. Go find it when the setup's there, and then you just monitor that trade. But you can have a lot of these going. And another thing to remember is the stop triggers don't actually tie up margin. Okay? Until they're filled, no margin is tied up. So you could have several of these working, only one gets filled, cool, you're okay. It's not like you tied up money on all of them while they're working. But Ruth, I was just saying, just right-click, go to Indicators, just so you can see that again. Add the Diagnostic MVP, add the Toolbar Shortcut, add the Expected Range. And earlier in the webinar, I talked about different settings you could do. And we'll have the recording up for you. Question that comes up. Tony asked, some time ago I started using Clarity Price and everything. Is that a good idea? I love Clarity Price. So it's basically using the average of the last 25 trades. 25, and middle 15 of those 25. Dropping the top 5 and bottom 5. And so it's a really good filter, because that way if you just get like a tick or two above, but it's not really there, you don't use it. But then that's like what the stop trigger function is doing for you on Nadex already. It's the same thing. For futures, obviously, you'd have to, you can't just use your limits. You're going to have to be sitting there waiting. So that's the challenge on it right now. Eventually, we'll build that in as like an indicator trigger. But, yeah, the Clarity Price is awesome. So, because it's smooth, it drops out as like the erroneous one tick that gets you into a trade and then turns around. So the binaries, yeah, even on the out-of-the-money contracts, I'm not looking to ride the things forever. So, I get an out-of-the-money, I'm going to look to get in and out of that trade $25 later, okay? But, the nice thing is when it fires off, you put them all up, and, you're going to be out of the trade within that hour. You don't have to sit and babysit it all day. Now, if you're a futures trader, you're going for bigger trends, you can do that. Now, also as a futures trader, you could decide just to hop out at the top of the hour. So, or just really tighten that up. I would really tighten it up at the end of an hour, because this original system was designed mainly for binaries. But, go in, you get a buy, boom, you can give a lot back. So, see, how this predictor is way down here, you can end up giving quite a bit back on that trade. So, you're gonna you may have to tighten stops up depending upon where it is. Right here, here's your stop. You don't even ever get to tighten it till way over here. But it works out. But sometimes you may give back too much. So at a certain point, you may want to just use some sense and tighten up a stop if you're using this on the outright market. But you can catch some great trends. So the biggest challenge I have for you is whatever instruments you want to trade it on each instrument you want to actually put your live money at risk on, go back 20 days for hours that it's tradable, okay? And test it out yourself, okay? So that's my biggest challenge to you, because it'll make you a better trader. You'll have more confidence. You'll trade it a lot better. And then hop in, do some demos, get the kinks worked out, and then go live. Okay? All right, y'all have a great day.